Good morning, one and all, and welcome to today's video. So today I just have the one pair on watch, and that is pound Swiss. For those of you who watch my videos regularly, you will have noticed that I didn't make a video yesterday, and that's because I didn't have any pairs on watch. So as I've said before, trading is to a large extent about patience, and sometimes the market just looks like it needs more development. There are still a lot of pairs today which look like they need more development in my top six and my additional pairs, but this one, pound Swiss, looks like it might provide an entry. So when the market is not providing what you look for, you don't try and force trades, you don't try and force a bias onto the market, you don't try and see things which are not there, which I'm sure we've all been guilty of at some point, and some of you newer traders may still be doing that, forcing your eyes to see patterns or see entries which have not actually materialized and which are not actually materializing. So once we learn to control our minds as traders, then we can stop that. We can stop this trying to manifest things which aren't there. Okay, I often think of if you've ever if anyone's ever said to you, "Oh, look at that face in the clouds," or "Look at that looks a bit like a dog, that looks a bit like Jesus." You may have seen someone, you may have had someone say that to you, and then you look at the cloud and you go, "No, I can't see a dog. I can't see whatever it is they're saying." And then if you look at it for long enough, you go, "Oh yeah, I suppose it does look a bit like a dog," or whatever they've suggested it might be. That is the same with trading. The longer you look at something, the more you convince yourself that it's there. Okay, and that's one of the reasons why more chart time doesn't actually mean more necessarily mean more profit. Okay, if anything, it's the reverse, partly for that reason. But anyway, let's get into today's pair, and that is pound Swiss. So on the higher time frames, we do top-down analysis. That's what the professionals are doing. So who are we to suggest that we should be doing anything different? Okay. So we have this 1, 2, 3 touch structure, which has a 1, 2, 3 very clear 1, 2, 3 middle section. Okay. So when we see these 1, 2, 3 moves, especially when the impulses are of a similar length, okay, that implies that that is a completed move, which helps us when we come down here for a 1, 2, 3 touch. That helps us to determine whether this is a completed piece of structure, okay, which is probably why. And if it is, then that's generally speaking where we see the impulse correction continuations to the upside. Okay, you might be thinking, yeah, but we broke out of this trend line. Okay, if you're new to my videos, you might be thinking, yeah, but we broke out of this trend line. Why have you not got it down here, for example? Well, what we typically see is these the moves do tend to line up with trend lines. Okay, these 1, 2, 3 touch structures the moves do tend to line up with them, and if they don't, what that typically is, which is why I've got my trend line here. We're always trying to trend lines are a way for us to determine the sentiment of the market. Okay, and the reason that I've got my trend line uh, across these 2 points is because this does not look indicative of the sentiment of the market. What this looks like is what we call mass psychology, which is where people get themselves caught the wrong side of the market. So if that's not if that's not the bigger players doing that, then that is not indicative of the sentiment of the bigger players. When I say the sentiment of the market, what I mean is the sentiment of the bigger players. We want to be riding the coattails of the bigger players, not of the retail traders that are losing money. And what they're typically doing is when price breaks below a low such as this, particularly if it's an all-time low, according to my data, what they tend to do is they tend to sell the lows and buy the highs, and that's one of the reasons that they're not profitable. I've said if you try to do that in any feat of business, if you repeatedly, not on a case by case basis, because you can be in a terrible trade and make money, and you can be in an excellent trade and make no money. Okay, lose money, but typically, generally speaking, if over a large sample size, you're constantly selling the lows and buying the highs, you're not going to be profitable. I don't think you need to be a genius to figure that one out. Okay, and one of the things they do is it breaks below an all-time low, which the bigger players are looking at as a bargain area of value for a buy. Of course, they're professionals, these people. They're not just jumping in any old how. They've got their own entry criteria, but generally speaking, when we're at all-time lows, that is a bargain area of value for a buy. And the same with sells on the flip side, okay? If we've broken all-time highs, okay? So they see it break below here, people just start shorting this. Well, the bigger players are waiting for an opportunity, basically letting these people hang themselves, and they're looking for an opportunity to get involved for the buyers. And then we see price completely smash back to the upside and break back above here, washing all of these people out that sold once price broke below this low, okay? And then after that, what we're just looking for, those of us who are trying to ride the coattails of the bigger players, is we're looking for that impulse correction continuation to the upside. And we know that if we break this trend line here, okay, and we do so impulsively, then we have a 90% chance of getting 90% of the way to the start of this piece of structure, which is why we call this up here the 90% rule, okay? So that's just the higher time frame thesis. So I'm just going to remove that there. And you can see that we have pushed up. We have that impulse correction potential continuation to the upside, okay? I always use words like potential. If you look on TradingView, sometimes you'll see people saying price will do this and will do that. If you use words like potential or might, it's possible, all those kind of, people might think that it's, oh, you don't trust your bias. It's not to do with that. The reason I use neutral words is to keep my mind neutral. And the reason I keep my mind neutral is because the market can do anything at any time. And if we keep our mind neutral, if the market does do something other than what we were anticipating, we're then able to adjust. Okay, we're able to adjust our sails, as it were, as the wind changes direction, and then we don't blindside ourselves to the things that we've learned to see that may be invisible to us if we're not able to flip our bias. Okay, if that makes sense. That is, I can't stress the importance of that when you're trading the markets. So what do we have here? We have this sharp move down followed by a sharp move up. That, by definition, means that a lot of orders were placed down here in a short period of time. And when they were filled, boom, price rallied to the upside. That tells me that there's potentially a lot of liquidity down here, okay? And that, generally speaking, if we tap into an area again, such as this, tap into an area like this, which we rallied from aggressively last time around, we'll likely do so with a similar level of aggression. And you can see it's a fairly similar level of aggression here, not quite as impulsive, but we rallied with a similar level of aggression. And one of the clues that we were would likely do that is, once again, because we have this 1, 2, 3 touch structure. Once again, I've got my trend line going across these 2 points and not this one here, because this move here does not look indicative of the sentiment of the market. Once again, that looks like people that are either not trading trend lines, or they're too zoomed in, or they believe what was previously support becomes resistance once it breaks below. That looks like people just getting themselves caught the wrong side of the market again, and it doesn't look indicative of the sentiment of the bigger players, who would likely see this as discounted prices once we break below here, given that there are no further inflection points until all the way down here. This would represent a discounted area of value, because we have that 1, 2, 3 with, once again, that 1, 2, 3 middle section, giving me a clue that when we push down to here and break just below, this is a completed piece of structure, and that this here is just people getting themselves caught the wrong side of the market once again. And as I've said previously, you can even see where many of them saw this as a retest to get short, presumably because they saw what was previously support as resistance once we broke below. And then once again, they get washed out to the upside. So I think anyone who thinks that patterns don't work, well, you've just seen 2 examples of almost identical patterns repeating themselves in exactly the same way. Another clue, just to touch on it, was the fact that we had this 1, 2, 3 where the impulses were of a similar length, giving me a clue that this is a completed move. Okay, so these 1, 2, 3 moves are generally completed moves, and as I've said previously, if they complete at an area of value such as this, where I would anticipate people getting caught the wrong side of the market, that also implies a move to the upside. Okay, now we may get one of the things I haven't touched on. We may get, if you look at I talk about the symmetry of the market, we may get something like this replicated to the right here, okay? So we may push up, push back down and get a similar kind of size correction like that before we push to the upside. But even if that was to occur, there would still be enough profit potential up to this 90% rule, up to the start of this structure, before price uh, started to move sideways and did that. So even that's not something which puts me off this trade idea. But what we have here, if we just remove that from the chart, is we have this impulse correction potential continuation to the upside. And notice, if you watch my videos regularly, I'm doing the same thing over and over again. Okay, that's going to give you confidence. If you can trade in a way where you're just doing the same thing over and over again, you're not factoring in new things every single time. I'd want something, if I was going to trade, when I'm trading in a very large account, I want something that I can just replicate over and over. I don't want something where I'm seeing it differently every time. Okay, so we have this impulse correction continuation to push higher. If we assume that the impulse out of the correction is of a similar length, that would take us up to here. But remember, there will be further corrections on the way up to this area if we are tapping into that high. Okay, if we measure it from the break, because as I've said, the volume being built within the correction, we're starting to build quite a lot of volume. The volume being built within the correction can dictate how far price moves out, as people that were trading within here bail out of their positions. And that would take us up to this area. And we also have that near miss. And I've talked previously about how these near misses, so this near miss to here, the start of this structure, they often get filled, okay? Because if we've not tapped into that area, there are likely still orders there which need to be filled. And obviously, if we've not tapped into that area, then it still remains a high area of value for people who are riding this move to the upside, if it occurs, to be getting out of their positions, and the new players, the bigger players, potentially to be getting in if we decide, if for whatever reason we reversed and came back down to test these lows again, okay? So you can see, if we just drill down, you can now see that previously I had my ray line as like so, okay, and I was seeing this as a near miss to here, and I said we'd likely come back down. We did come back down, okay, but if we just zoom in, there was an entry here which I decided not to take. Where was it? I think it was about here. Okay, I'm just going to drill down to the 15-minute to show you the entry that I decided not to take, just as a refresher. Okay, so we had this little correction here. We tapped into the area of value, which was there at the time. We pushed up and we flagged, but I decided not to take this because we didn't have, within this, we didn't have this middle section here, okay, before pushing down to test this low again, okay? And if we just look on the 5-minute chart as well, if I just zoom in, so one thing I've noticed from my testing, and this is where, as I've talked about previously, pattern separation helps, where we just separate. I just use a paintbrush tool to separate the patterns. I've started doing that on a daily basis again because I've found it very, very helpful. So we have this move up here, but it doesn't have that 1, 2, 3 middle section. When that happens, even though we tapped into this area here, this little hook point there, that implies to me that this is not a completed structure from the testing that I've done. And when that happens, either the price breaks out of this correction and corrects sideways like it has, or we form something deeper, such as this, where we get a middle section like that, and then price pushes down, and then that is a completed move. But this correction would then be disproportionate to the move up which has preceded it, okay? So specifically, the reason I didn't get involved is because this move here did not have a middle section, okay? And what has happened, if we just look now, so what that tells me, okay, if I just zoom back out, there we go. Let's get that thing off the chart, get the paintbrush tool off the chart. What that tells me, right, I said that this would likely happen, that we'd likely come back down again. That's one of the possibilities. We did come back down again, but we just tapped into the same area, okay? We didn't really, this is not, when I see a move like this, is not indicative of a move to the upside. So when I see this, when we broke above here, and if we just analyze the nature of the market, So how price moved up here, all in all, that is quite a corrective move up. We have one impulsive candle there, but generally that's just a corrective move down. So since when we scoop back down, we kind of just tapped into the same area again. That gives me a clue that this is not an area of value, because price did not find enough liquidity here to send it to the upside impulsively, which then tells me, okay, excuse me, if that's not the area of value, what is the area of value? And the next thing I see is that we have a little consolidation sat just below where what I've just plotted my ray line on. We have this little consolidation here, okay, which caused price to break to the upside and break above, okay, all of this, okay, and above this high here. So when we exchanged liquidity here last time around, price broke above this high here, and all of this corrective price action which it was trading within, giving me a clue that potentially that's where the liquidity is sat for the move to the upside. And the clue now for me that that might be the case is that we have a near miss to that area, and we have that potentially that 1, 2, 3 middle section to then come back down, tap into this area, and then potentially we see that move to the upside, because this would then be a 1, 2, 3 touch structure with a clear middle section. So a completed piece of structure, which just so happens to line up with that area of value that I was just talking about. Okay. And there was one other thing that I was going to say. Yeah, that's what it was. So when we have a touch like this, but we don't kind of move away, I said to you in a previous video on the flip side, I believe it was, I think when I was looking to get short, I think it was euro pound. When we don't really move away from the overall structure, then I just see that as this is one touch. Okay. So we're looking for the 3 drives, basically the first drive, second drive, and then generally the third drive is the one to go. Generally speaking. So with all of that considered, when I did my forecast last night, price was, where was it? Price was here. I was anticipating that would likely come into this area, and you can see that we've kind of even, this is an example, okay? We have a piece of structure here. We have that first drive, second drive, third drive. We have that kind of 1, 2, 3 middle section, giving me a clue that this is a completed piece of structure. So when we come back up here, this makes sense why this would not push to the upside, that this is just a kind of retest of the break of this structure here, and that we'd likely, so price found some liquidity by retesting this structure, and now it's likely pushing down to this area here. But we have to remain neutral as traders. We can have these biases, and then literally something happens and the whole thing's invalidated. So we do have to factor in the fact that I know it was a bank holiday in Japan when I was doing my putting my little things in my Google Calendar last night, and alerting myself to red flag news. I put stuff like that in Google Calendar so that I don't trade into red flag news. I know it's a bank holiday in the United States today, so we may get slower price action for that reason. But what we also have is economic data coming out of the UK and the European Union at this morning. I've got the times logged in my Google Calendar. That might act as the catalyst which pushes us down to this area, even though we're a little bit further away at the moment. That might be the catalyst which pushes us down into this area. And if it does, by the end of the day, then what I'll be looking for is the following, okay? So I'm just going to put that back to the top. What I'll be looking for is the following. Given the size of this correction now relative to the move up which has preceded it, we do have to be mindful of that, because sometimes that can make these structures more neutral and slightly less reliable. What I'll be looking for is price to tap into this area here, near this area of value that it near missed to last time around. Then I'll be looking for a push up followed by a flag, and then I will be looking to get long on the break of the flag or within it, and then I'll be able to manage it up to this high here as a first inflection point, or even this high here, this wick, for something in the region of 6 to 7%. And of course, if we got the risk entry within the flag, that would increase the risk to reward ever so slightly. But that's what I'm going to be looking for today. I have an alert set just above this ray line. If it is not triggered, then I will not be looking to place a trade. I hope you've enjoyed this video. I hope you've enjoyed the slightly more in-depth nature of it, because of the fact that I only have one pair on watch. And I look forward to having you watch the next video. Thanks very much for watching, and I will see you again soon.